Also, the recordings are going to be on YouTube. So if you haven't subscribed to our YouTube channel, it is theblankcheckgroup.com. All of our sessions are now going to be posted to YouTube. But if you're in the Discord, you're going to get the session earlier. As soon as it's done rendering, it's going to post in the Discord. But also for the YouTube people, you may get it like an hour or two after that. So just be on the lookout for that. All right. Sharing my screen here. Where are we at? Screen 2. All right. All right. So the first thing I normally do is take a look at the economic calendar just to make sure Jerome Powell isn't speaking, because we know that Jerome Powell is going to shake the market up and cause us to lose money one way or another, regardless if you're playing calls or puts. So this week is what, the 19th to the 25th. When you go to pull up your economic calendar, the only thing you have to do is set it on economic. You don't have to set on the other settings. Make sure you're picking the US if you're in the US. I know we do have some people from Canada. You can also toggle on the Canadian news, and then you can also do the entire world if you want that. But I think it's overkill. Turn on the entire world. The next thing you can do is turn on this button right here for high importance. You can see I'm toggling it on and off. This is going to help you figure out what reports to pay attention to. If it's not on the high importance list, you don't need to pay attention to the report, because it's probably going to be a non-factor. Like for instance, if I turn it off on this Monday, we can see that we have one of the Fed speaking, but he's not like Jerome Powell or anybody that's going to shift the market. So the rest of these events you don't really have to pay attention to. Again, once we turn on that high importance. So Monday, we don't have anything. Tuesday, we don't have anything major. Wednesday, we have a FOMC minute. So this is when the Feds decide on interest rate cuts. And then, well, this is actually the notes from the last meeting. So these notes can be updated. And anytime these notes are updated to say anything that's different from what happened or what we saw last week, it can cause some volatility in the market. So 2 o'clock on Wednesday, 2 p.m. Eastern Standard, just watch out for this if you're in a trade already. Or you can use that opportunity to hop in a trade just in case the market pulls back or shoots forward. All right, Thursday, we don't have anything major, but every Thursday we do have a job report that comes out at 8:30. And you always want to watch out for that job report, especially right now where we're like, doing a tightrope walk as far as interest rate cuts. You just want to watch out for Thursday mornings, actually. Friday, we have Jerome Powell speaking. I just spoke him up. If you're in a trade, just be careful. I don't really know. Let's see, what's this speech about? They don't really tell us what he's going to be speaking about. But if you're in a trade, regardless of the position that is in, upside, downside, whatever, just be careful around this time. Anytime Jerome Powell is speaking or we have the Feds presenting information, we always have some chop in the market. And that could be either good or bad. Like if your trade is going good, the chop can cause your trade to go backwards or, waste time as far as your option contract. So, but do I have any questions? Oh, I take silence as a thumbs up. All right.
I have a question.
Is that Ali?
Yeah, that's me. So where are you watching this? Is that TradingView, and do you need a subscription to be able to see the events?
Yeah, so this is TradingView. I don't think you need a paid subscription to see the economic calendar. I know for some of the indicators that I'll be showing you, you may need one. I know in particular is the VRVP, but just looking at the calendars, no.
Okay, thanks.
You shouldn't. Yeah, they shouldn't require an account. Not from what I've seen. But yeah, should be good. And if they do, let's say if they ever decide to put it behind the paywall, if it's not, you can always go to MarketWatch. MarketWatch is a older looking website, but I still like the news, and I still use it from time to time while looking at some of my other trades. So that could be a good alternative for you, aside from like your actual app or brokerage.
Got it. Thank you.
No problem. Cool. Any other questions? Boom. All right, cool. Let's keep moving. All right, so let's look at the SPY. It has been making a comeback. Ooh, not too much on here. We can leave that. It'll be fine. It's not as much as last time. All right. Let's move over to the day. And let me reset my chart. Cool. All right. So what we're going to do is just cover the different indicators and break them down one by one. Each indicator is extremely simple. Once you figure out how it works, then you will know like if you need it or don't need it. When I first started, I did not have all of these indicators. I did not have all of these lines on my screen, and I was still able to make money. The three top indicators, before I even break them down, I would say that you need the RSI. You're going to need a form of an MA ribbon. So my MA ribbon, we have 4 moving averages on it. I'll break it down later for my newer people, but you need at least 2 moving averages for any trading setup. Now, if you're investing in doing fundamentals, you're crunching more numbers, so you may not need, moving averages that may not need to use them that often. But I recommend finding a moving average setup that you like. So again, RSI, moving averages, and the MACD at least. That's what I started off with. Was able to make decent money on swing trades. And then once I started to get into trading options and bigger trades, then I needed more information. So I started to add these other indicators that I can turn on and turn off. But all right, let's go ahead and break each one down. The first one, and what we'll do is just isolate the top. So the first one we're looking at, this is the RSI. The RSI is the relative strength index indicator. Basically, what this is going to do is tell you the stock is hot or cold. So when you go to buy a stock to trade, you want to buy it warm. You don't want to buy it hot because if it's hot, then the RSI is going to show you that, hey, eventually it's going to come down, right? So the RSI ranges from the bottom is at 30, the top is at 70. If it goes above 70, it's extremely hot, right? You can see these green little mountain areas where it's popping up, but it's coming right back down, and it's a sharp drop, right? So it pops all the way up to 77 here, goes all the way back down to 67. Pops up to 71, all the way down to 65, shot all the way up to 81, came all the way crashing down to 70, popped back up to 76, all the way down to 50. So you want to buy an RSI that's favorable. For me, the range is 45 to 55 pointing up. So right now the RSI line is pointing up, but it is at about 60. So the way that I look at it is that if this is going from 60 to 70, you got about 10 points before it hits where it hits. And then the trade is not worth it at that point on this time frame. Now you could look at a different time frame, but if we're looking at the daily time frame and the RSI is at 70, I wouldn't touch it unless I'm gonna like dollar cost average or go long on the stock. If it's at 70, I'm not trading a 70 RSI on the stock, especially on the daily time frame. Different, if it's on the 15-minute, then that's kind of a different situation. But we're just talking about swing trades. So again, this indicator is going to tell you the stock is hot or cold. If it's too hot, I wouldn't touch it, especially if you're swing trading. Now, if you're trading options to where you can make money if it's going up or down, again, that's a different conversation. But on the low side, I know everyone likes to ask, well, what happens when the RSI is down towards 30? Let me see. Someone had a question. Ali, you have a question?
Yeah. So when you say it's too hot, does it mean just that it's getting a lot of volume, or does it mean that it's just going up?
Yeah. So the RSI, good question. The RSI is showing you that the stock is either overbought or underbought, right? So if the RSI is higher up in the 70 area, 65, 70, that means it's overbought. That means that a lot of people have been buying it up, it's getting bought up, and it's climbing at a fast rate. Those you could get in and play the momentum. Like for instance, this stock is at 69, 70. You could, hop in real quick and hop out and run the risk. But that's what the indicator is telling you. Again, overbought to the upside around 70, underbought is when it's to the downside around 30.
Okay.
Yeah, yep. RSIs can continue to stay overbought and oversold for long periods of time. Yes. That's why I think multi-time frame analysis is good too, meaning you can look at the day, the week, the 4 hour, 1 hour, depending on the style of trade you're doing. But nope, Ali, great question. All right. That is the RSI. Again, it's going to tell you the stock is overbought, underbought. You want to buy a warm stock, which is between 45 and 55, and take the RSI up to about 65, 70. Go ahead and hop out, take profit. All right, next thing. All right, let me hide some of this stuff really quick. All right, let's talk about support and resistance. So when you're looking at these candles, right? I always like to say this: red candles represent a drop, of course. Green candles represent a pop up. And when you're reading the candles, they start the day at the bottom and climb their way to the top if they're green. So if it's green, that means if you're looking back at the chart and you're wondering, okay, what happened on Tuesday the 13th? If you look at this candle, it started at 5:36 at 9:30 Eastern Standard. So at the beginning of the day, it started here. Throughout the day, it climbed up and it closed here. So this is the price movement for the day, and it's green to show you that it went up. Now, if it's red, it's doing the exact opposite. Really simple. It's starting the day here at 5:52, and at the end of the day, it was at 5:42 to the downside, and it's red to show you that the movement was to the downside. So I always like to mention that when looking at candles. Someone had a question. Can you show how scan for stocks and TradingView? Yeah, Ross, that's a great question. What I'll do is show you that once it comes back around to me, but I want to go ahead and get through these indicators. But yeah, I can we can take a look at how to put but I mean, it should be really simple. In the stock screener, you can go ahead and set up the settings for RSI to scan for overbought and underbought based on the RSI. What you'll have to do is just put it like greater or less than 50, or greater or less than 60, 70, so on and so forth. But yeah, we can we'll take a look at it once it comes back around to me. All right. What are these blue lines? Real simple. These blue lines are going to identify a trading range for you, right? So each line has a name. So if the line is above the stock price, so the stock price right now is 554.31, 554.31. If you have a line above the stock price, so let's say we put our line here. If you have this line above the stock price, this is called your resistance line. So resistance is going to act as a ceiling. When you're setting up a trade, you normally need a ceiling and a floor. If you have a floor and a ceiling, you know where to get out of the trade. You also know where to buy back into the trade. A lot of people ask me, okay, you said that DKS was going to be going up. It's up. Where do I take profit at? Well, you take profit normally once it reaches resistance. So if the stock is at 554 and it's going up to 560, and it hits this blue line, that lets you know that I mean, honestly, sometimes I take profit getting close to that line. I can be at 558, 559, and I'm going to go ahead and take profit. But that's why you want to set your support and resistance line. So again, resistance is going to be the ceiling where the stock is moving up to, and then support is going to be the floor where the stock is dropping down to, right? So you want to draw a best case, worst case scenario, right? So the best case scenario for right now, for what we've drawn out, would be for this to go from 554 to 560. The reason why I picked the 560 line, the 560 price line, is because we can see around 560, we have the stock breaking that price point with a green candle and then rejecting on the red candle, and then trying it again with a green candle and then rejecting or pulling back again on the red candle before popping up and then just giving it up again and test it. So normally when you're drawing these lines, I don't care if it's support or resistance, you need 3 touches and a break to go ahead and place your line. And again, you may have many, like we can put one here, here, here. There's a whole bunch. But these are going to be your levels of support and resistance, and these can be the levels where you can find the stock consolidating. So if you're trading a stock and the stock has been moving up for 3 days in a row at a rapid pace, but then on the 4th day, it starts to slow down, it may be testing the ceiling. It may be testing its local ceiling at resistance. And that may be an opportunity for you to go ahead and take profit on the stock. Because once the stock consolidates, it's going to do either one or two things. It's going to keep going higher or it's going to pull back. And if you're sitting at resistance and you check your other indicators and it's all out of gas, then it may be pulling back, which, you know, you want to take profit at the top of the mountain, not at the bottom. But again, this is why you want to set it up. So now this trade range that we have is between 542 and 560. We're at 554, and we can, we can look at it to see, is this even worth taking? The profit is what, $6 to the upside, but then we're losing way more. We're losing about $12 to the downside. So 6 to the upside, 12 to the downside. Based on how this trade is set up, just, if we solely went off support and resistance, this may be a trade that you wouldn't take, depending on the profits. Again, this is not including the information from the other indicators, but again, just outlining it like this, you'll be able to figure out if you want to take trades or not based on support or resistance. Ty, you had a question?
Yes. So you said that it needed 3 touch points and a break. What's the break?
Yeah, well, three touch points. You don't need it to break. A break is what you would want. For instance, like in this area, you have about 2 or 3 touches in a rejection. I didn't mean a literal break to the upside, because you can have a cluster like this to where it breaks through resistance and it bounces on the top of it and then it breaks to the upside instead of breaking back down through support. So you need 3 touches to identify a place to place your line. So again, 3 touches, we can place our support. We can also see that this support was also checked when the candles came back down to the downside in the downtrend. We got a couple green candles here, and then we can see when we came back to the upside, we have a few candles that kind of staggered or hung around the same price point one more time before we broke and shot up to about 554 where we're at. So you want to find points to where you have a lot of consolidation. Again, normally it's about 3. I like to do 3. Some people would do 2, but I don't think 2 is enough for confirmation. But 3 will give you a good place to set support and resistance to find out the tough points. Does that help, Ty?
Yes.
Cool. Ali, you got a question for me?
Yeah. So in this case, where do you see the next resistance? 560.
Yep. Yeah, I'm looking at 560 for where it's at. So honestly, you could do this. I mean, that's what, 554. Honestly, you can make it 555 because we have some hiccups here. We also have some small candles and low volume price wise in this area. So we could have, we got a check in here, and here. We could also pull back down to about 550 before we move back up. Again, this is just solely looking at this without the other indicators. But if I'm looking at this right now, yeah, my next level of resistance is 560.
Got it. Thanks.
No problem. Great questions. Any other questions? Sorry, I was drinking some water. All right, cool. Let's keep it moving. Next thing, MA ribbon. So the MA ribbon, again, we talked about this a little bit before. Yeah, megaphone pattern on the SPY. Oh, yeah, bouncing from the top to the bottom. But yeah, so next thing, MA ribbon. So the MA ribbon, if I back out, the MA ribbon is these lines that you have here. Each line represents a time period on the daily chart. The reason why I'm saying that is because we're looking at the date. So as you change the different charts, so if you change it to a 1 week, change it to a 4-hour, these moving averages are going to adjust, and it's going to give you 20 or whatever, or so 20 or so periods based on how you set it up. The reason why I'm saying 20 is because you look at this, you look at my MA ribbon, you see I have a 20, 50, 100, and 200. So these are the different moving averages that I like to use for swing trading. They're also simple moving averages. TradingView allow you to use exponential, so on and so forth, just different moving average types depending on how you want to set your trade up. But these are the ones that I chose to use: 20, 50, 100, and 200. And the reason that I like to use 4 is because the 4 moving average setup, I really only pay attention to one for the most part. I pay attention to the 20 line. That's my goal line. And you can see that when these are in chronological order, you got 20, 50, 100, 200. And this is what I mean. You can see that, and I have them color coded. You got yellow, orange, burnt orange, and red. When you have these 4 in chronological order from least to greatest, meaning 20, 50, 100, 200, you can see the 20 is bouncing the candles off, right? So it's easy to figure out a point of entry when these are stacked in chronological order and you're coming down for a test on the 20. It's not going to always happen on the SPY. The SPY has a cleaner chart than most, but that's normally what I look for. If you're looking for, an A+ setup, an easy, layup trade, it may not be a moon play to where, you turn 1,000 into 10,000, but if you're looking for base hits, it's easy just to play off of that bounce on the 20, right? So you can see that there has been plenty of times to where the stock would hit, we can use this line right here. The stock will hit resistance, like it was climbing up here, boom, hit this, came down to the 20. This would have been an easy place to enter a trade. You enter a trade, You'd have got that nice green candle. And let me zoom in. So it hit resistance, came down, tested the 20. You could have entered in on either one of these candles, depending on risk management. And then boom, you would have got that nice break back above the 20. And then you got two other green candles that took you right into resistance. You could have went ahead and took profit, because you can see in this area, we had an issue breaking past, and we had a wick that touched it back here. It pulled down again below the 20. You could have bought again, rinse and repeat. You could have sold right here. But then again, because this 20 was smashing the candles up against this this resistance, it forced it through pretty much, and we got a pop, an explosion on a light on a nice green size candle to the upside, and then it kept running. So the reason why I'm saying that is because when you're using your moving averages, again, if they're stacked in that order, you really don't have to worry about too much. You can just pay attention to the 20. Now, are they always going to be that clean and simple? No. But that's kind of your job as a trader, is to find good trades, A+ setups, and to make money off the some money off the layups. You don't always have to go for the half court shots. I mean, doing them from time to time is cool, but most of your trades are probably going to be base hits, and this is one way to get a lot of base hits. So just watch your moving averages. Now, when this 20 dives underneath and they're out of order, then what you have to do is watch and see where the 20 is going to cross back over to the upside. So at this point, what I would do when the 20 crossed underneath and they were out of whack, I just said, all right, well, this is not based on how I want to trade my swing trades. This is not in the formation as far as my moving averages for a trade that I would want to take. So I just went and found another stock that had the same setup. Again, we have thousands of stocks in the stock market. So same setup that I was fishing for something easy. I didn't want anything too difficult at the time. So I said, okay, cool. I'll wait until this moving average recovers. I'll check back in, a few weeks, 2 weeks. I'll go trade something else. And when I came back, cool. They're getting right back into that formation. The 20 crossed back above that 50. And then guess what happened? We're bouncing off the 20 again. Every time we're getting close, we're bouncing off the 20 until we came into this point to where the candles took us below the 20, 50, and 100 before we tested this level, which was another spot. If you trace the history back again, this is why setting support and resistance is important. This bounce right here, we could have called this just by looking in this area. And I actually think I called this in the Discord. By looking in this area, you can see heavy traffic right here for a bounce. A light touch here, but then a lot of choppiness on that price point the last time back in March that it happened. So easy place for a bounce. Did I think it was going to bounce all the way back up here? No, but I definitely knew that we'll get a check-in here based off this support line. But again, now what we're seeing is the same thing that happened in this area. That 20 is bending and curving back up. 20 is bending and curving back up. How do we know that 20 is going to curve back up? One, the 20, it only takes 20 days to make this line, so it's a really flexible line. And then on top of that, we're hopping and skipping above all of the moving averages, and it looks like we could go back up to 560. If we go back up to 560, this 20 is going to be curved up. We should get another crossover to get the 20 above the 50, and then we're back to this order: 20, 50, 100, 200. Only thing we have to worry about is playing top side of the 20, and we can take those layups. Do I have any question? Ty, I see your hand is up.
So the order, like when you say that it's sort of ascending, it's like 20, 50, 100, 200. So that's ideal when they kind of go from smaller to larger.
Yep. Chronological order from least to greatest. Yep. If you have 20, 50, 100, 200, it's easier just to play off of that 20.
And that's a signal of an uptrend when you see it in that order.
Yep.
And you're not looking for any crossovers?
Not on the moving averages, no. Not at that point. Again, when you have them like this, because they may not cross over, right? They crossed back here, but then once they got into this formation of 20, 50, 100, 200, they're not crossing over. They didn't cross over. Last time they crossed is December. Next time they crossed is May. So it's 5 or 6 months of not crossing of a straight uptrend that we would have missed out on. We're just counting the cross.
And then there's a bearish crossover. that happens.
Yep. It's a bearish crossover to the downside. Yep.
In bear markets, how long do those crossovers last?
Normally the crossovers to the downside, it all depends on where the candles are in position to the moving averages. For instance, when we had the crossover here, we can see that the candles went down, but they didn't break the 100. So that means that the dip was going to be a little short dip because it broke the 50 and the 20, but it didn't break the 100. So it wasn't a deep dive for it to come back up. And so once we shot back up off this heavy level of support right here, we just bounced up. Once we were back above both moving averages and we just kept going up to the next level, it just carried that 20 back up. So since it was a shallow drop, we only dropped below the 20 and 50. We came right back. This one was a bit deeper because we dropped below 20, 50, and we dropped below the 100 heading towards the 200. So this one was, I mean, it was a deeper hole to climb out of, but this one, I mean, you can see the candles was just fighting its way right back up to where it just was, what was that, in the beginning of August. So it depends on how deep the drop is and then where the moving averages are and did they have time to react. So like this 20 was dropping, but this climbed and came back up so fast, it's going to bend that 20 back to the upside.
But there's still a crossover.
Yep, it's still a crossover. Yeah, but the candles are above all of the other moving averages. So even though you have that crossover, again, this is where the other indicators are going to come into play. But even though you have that crossover, you have these candles that are above. As long as they stay above, they're going to be pulling this 20 to cross back over that 50 to the upside to put us right back into where we were right here and right here. Cool. Any other questions before I move on to the VRVP?
So, okay, when you look at this chart, right, because there's a lot of talk that the volatility isn't over. You know, like the unwind of the yen carry trade and fears about a recession. So there's sort of like part of the market that's very optimistic because interest rates are coming down, but they priced that in. Other, sort of other naysayers are saying actually the volatility is not over at all, and that if we have another bout of volatility, it will be even sharper. Can you spot any trends by looking at this?
Not yet. I mean, if we do have another sharper drop, then it may not be to the downside as much. We can see this first drop took us down to what is this? 498. And then you can see this one right here took us to 510. If we go, let's say we break above 560 and we go to 570 and we come back down to, instead of coming back down to 510, we come back down to 520. Yeah, it's a sharp drop, but are we making a new low? Are we making like this was the worst case scenario, 490, right? We didn't come to 490. So we're still, you scrunch the chart up, still in an uptrend, right? So we could have a sharp pullback, but I think it'll be from a higher point. We may be at, I don't know, 570 potentially, and then we could pull all the way back down to 520, but that's still not as low as 510, and that's definitely not as low as 493. So it's possible.
So you basically see the bull market being intact overall.
Oh yeah, yep. Yeah. Again, this is an election year. I think people forget that. I've been saying that since January. They're not going to let the market they're not going to let the market slide into the election, because I mean, then you're just going to pick whoever the president is not at the current time. If the market is trash, we already have talks about a recession, and you go to vote, you're just not voting for the person who you feel trashed the market for you. Right? People are happier and will vote, I guess evenly across the board if they feel like the market is up when they decide to put money in. And so since the market has been climbing back over the last, well, the market has been always, again, this always has been going up depending on the time frame you look at it at. But in an election year, they're not going to let it tank. Now, 2025, who knows? But they're not going to let this fail going into the election. Does that help, Ty?
Yeah, thank you.
No problem. All right, cool. Next thing, VRVP. So the VRVP is a real simple indicator. Now, this one, you do have to have the paid version. I think you have to have premium to get this. I'm not sure if they've changed that. I know when I first got it, maybe a year ago, you had to have premium, but they do have a version, I think, that's free, and it's going to pop up on the other side of your chart. But the VRVP is a really helpful tool. It's real simple to use too. Well, let me show you the data window. So the VRVP right here is the visible range volume profile. The visible range side means the more candles and data you bring into the screen, the more these bars right here are going to adjust for you. So you can see these bars right here are showing different levels, and the blue and yellow just means buys or sales. So the VRVP is showing you the buys and sales at the different price points. So if you look at this price point right here at 500, you can see that we have a lot of sales. We also have some buys. If you want to know how many, just hover over the bar, look at your data window, and you can see up. If I hover over this, up is at 104, down is at 153. So that means that there's more down volume or sales waiting right here versus buys. We have 104 buys, we have 153 sales. And that's what the VRVP is going to tell you. Now, if I zoom in, give it some time, it adjusts, right? So it's again, it's a visible range. The visible range is based on what you have shown. So the more you make visible, the more data it can take into its calculation and show you the buys and sales at the different price points. So I like to use it for exits and entries. If I know I'm going up against a level where there's a lot of buys, I'm sorry, if I know that I'm going up against a level where there's a lot of sales, I'm going to go ahead and take profit at my resistance. As soon as I get up to it, I see, oh, it's twice as many people waiting to sell there. Let me go ahead and take profit. Ali, you had a question?
Yeah, so when you hover over that 530 range, the one above, yeah, so this specific VRVP, is it talking about which candle? The one that first hit 530, or the one it has gone up, come back down, and it's talking about that zone, or a combination of both?
Yeah, it's actually a combination of both. That's a great question. So it's basically telling you everything that's at that level. Just like if we were to flip this and put this at the bottom of our chart for volume, you know, going up per candle, this is telling you volume per price level pretty much. You can also make these bars smaller. Like I have these bars set on default, but I can chop these bars up to 100 bars per one bar that we're looking at now. We can have it chopped up. But yeah, it's telling you the buys and sales at the price levels. More sales, more buys at the price level. So if we're looking at 530, this is the one you're looking at. We got up at 55, down at 42, for a total of 98. So it's more people waiting to buy here versus sell. And you can tell because it's more blue than yellow. So if there's more blue, that blue equal buy, yellow equal sell.
Mm-hmm. So the larger this bar is, the more volatility you can expect?
There you go. Yep.
Okay.
Exactly. So you can see in this area, this bar is pretty is a pretty nice size. More sales than buys, but there's a lot of volatility on that line. If we just go out to the left, you can see how many times we tested and broke and bounced and chopped around before we actually broke higher or dropped lower. Does that help, Ali?
Yes, it did. Thanks.
Perfect. All right, last two indicators, the MACD. The MACD is real simple. The MACD stands for moving average convergence divergence. It's simply telling you the relationship between the two lines. One line is buying pressure, one line is selling pressure. The blue line, which is buying pressure, is telling you that the stock is receiving pressure from buys and is going to go up. The red line is telling you that the stock is receiving pressure from sales and is going to go down. So what you want to do is just pay attention to it on the right-hand side and figure out which line is on top. It's real simple. If the blue line is on top, the stock is receiving buying pressure and the stock is going to want to go up. If the red line is on top, the stock is receiving selling pressure and it's going to want to, there we go, looks better. And it's going to want to go down. You can see right now, we have blue on top and the stock, we just took a look at it. The stock has been rising sharply. Now, this chart behind the MACD, you can use instead of the lines. Like if the lines get too crisscross and scribbly, you may not want to use them. You may just want to use the histogram. The histogram is telling you based on color on what type of pressure is being applied. So if it's green, buying pressure is being applied. If it's red, selling pressure is being applied. So you don't have to guess. You look at these lines, you can't tell, check the histogram. And then once it starts to fade the color, like this faded pink or faded, what is this, green, then that's pretty much telling you that it has potential to flop to the other side. So you can see when this was fading green, boom, it turned red. And then you can see when this was fading red to the upside, it popped up green. Again, MACD, real simple, easy to understand and just pay attention to. And if you want to know the trend of the stock, like is it trending up or down, easily take a look at it. Let's see, Yvonne, you said you have the essentials plan and you can get the VRVP. Okay, cool. Yeah. So yeah, you get the essentials plan, you can get the VRVP. You don't need the premium one. Ali, you have a question?
Yeah, on the MACD, do you gotta set up the choose the moving averages that you want to use or no?
Not for the daily. For different time frames, you can I mean, you know, since it's oscillating, you can check the settings on different time frames. But for my day trades, I leave it just like this. I don't adjust anything, especially on the day. It works. It works good for the day.
You just turn the indicator on and it figures out for you automatically. Like you won't have to put in the numbers for what moving averages you want.
No, yeah. TradingView with the MACD, you don't have to make the MACD before you use it. You can use it with the, yeah, I get what you're saying. All right, cool. Last thing, stock RSI. So stock RSI is short for stochastics RSI. The way that I look at this indicator is a momentum indicator. So if the MACD is the trend indicator, this is the momentum indicator. The way that you want to read this is that it goes from 20 to 80, just like a normal RSI, but it is extremely sensitive. So if the stock moves up a little bit, this could jump 20, 30, 40 points to the upside. Now, one thing to note is that it loves to frequent 0 and 100. One of the easiest ways to find a trade that has a lot of strength to the upside is to find a stock with a stochastics RSI that's below 50. It has to still be pointing up, but if it's below 50, that means that it's already gained some momentum from being above 20, and then it can pop easily up to 80 and to 100. Again, this momentum indicator is extremely sensitive. So being at 50, you can look at it the next day and it's at 70 or 80. It can move that fast, especially if the stock is climbing. So that's one way that I like to use is stochastics. Also, it is tied into your normal RSI. So when the normal RSI decides to go up, and if you think the normal RSI is going to keep going, you know, from 65 to 70, if it's already there, and you check this stochastic, if it's already at 100, it's pretty much at its limit, right? So you want to wait for a reset. You want it to pull all the way back down to at least, you know, of course, below 50, but 0 to 20 is, I would consider that a full reset. And then that way you can go ahead and buy anywhere between 0 and 20 if you can't catch it. If you can catch it below 50. So again, 50 is that point to where it has the momentum, is going to the upside. And then 20 is 0 if you just want to buy the trade, sit, wait, dollar cost average, or, you know, or take your time with the trade. I think 20 to 0 would be good for this. Ali?
If something is around 100 or closer to 100, is it safe to say that we can take a shot by shorting it?
There you go. Yep. You can look at it to pop back to the downside. Now, how long will it take? I can't say, because you can see that it can hit 100 and just sit up here for a second, but it's eventually going to come down. Like if we look at the history of it sitting up there for a second and then it's coming down.
Mm-hmm.
But yeah, that's another good way to do it is when it hits up, when it maxes itself out, then you can be looking at, okay, cool. Eventually this has to pull back. And when it pulls back, it's probably going to pull back to 80, 50, 20, 0. So those are the levels that I will watch on a pullback from it.
Mm-hmm.
Cool. Great questions. All right, cool. If I don't have any other questions, I'll go ahead and pass it over to Mark. Again, if you have any stocks that you want charted out, this would be the time. Go ahead and post the tickers in the chat. I can see Ali has already posted some. But yeah, I'll go ahead and pass it over to Mark.
Appreciate it. Give me 1 second to share my screen. we go. Okay. I'm gonna start off with all these picks. So we're gonna start off with down. All right, so we're gonna look at the weekly and then we'll move to the daily once we checked out the weekly, just to see exactly what's happening. All right, so from the weekly, it looks like that they were testing their 50-week moving average. They broke underneath it, and then they're finally rejecting. Looks like they may be rejecting this moving average and moving in the upwards direction. So if they was to continue to move upwards and looking at the other indicators, they are probably going to continue to move upwards. We got the RSI level pointing upwards, and it's sitting at 50. The stochastic RSI level is low, but it's starting to point back upwards, and it's just testing. It just finished testing the oversold region. So we could be seeing this move upwards. That rejection that we had on the moving average, the 50-week moving average, could be showing us a bullish trend. If it was to continue to trend upwards, we could be seeing this week, we could be seeing it try to get back to 127. And before that, we may see it, we can punch it in a little bit closer and say 120 before it hits the 127 range. So that's the two resistance levels we can have. Again, and then that resistance level, that top resistance is really strong just because we see that that's the moving average. That's the 20-week moving average. And again, all stocks like to use moving averages as either support or resistance. So when you're seeing it get close to that level, you can use that as target prices. The MACD is, the buying pressure is below the selling pressure, which is normally bullish, but we can see that it's starting to try to flatten out and start to trend upwards in value. So you can just be on the lookout for that. And if you want to get into a trade, looking at it on the weekly, just wait till you see the MACD get a little bit closer. For support, if it was to go down, the first place it's going to come and test is going to be 100, and that's just because that's the 50-week moving average. Again, moving averages are going to be treated like support and resistance when the stock is trying to reach one of those areas. If it was to break underneath support, we could be seeing it get to right here at about $86. Okay, $85, $86 will be the next level that I would say support will be. And from there, we're looking for a rejection on the price. So if this stock price was to get to $98 or $100 and reject, start to trend upwards, we're going to be seeing it get to 118. If it was to break below this $98 range, we're going to be seeing it get to 86 before it tries to correct itself. And that's on the weekly. So if we look at the daily, just to see how it's going to be moving on Monday. Okay, so we see that stochastic RSI level is high. It's in the overbought region. However, that's fine because it can stay up on this level for a little bit. The RSI level is pointing upwards and it's sitting at about 45. So lately it's been treating the 50 range as we can see as bottom. So now it's turning around. Can it break above that RSI level of 50, which is what we're trying to see. MACD is also bullish. Blue line buying pressure just crossed over the red line, the selling pressure. And when you see this happens and they have that high stochastic RSI level, sometimes you see it continue to trend upwards. So if it was to continue to trend upwards, we're going to be seeing this try to get to 119 this week. It is testing moving averages on the daily. So we see that where it's testing the 20-day moving average and the 200-day moving average. So if it can stay above this level, we should be seeing a bullish trend for this week. We can also potentially say this could be forming this is forming a head and shoulders pattern where we have the first shoulder right here. The trend is trending down. Created the head. And now we may see a little pullback on this moving average to create this. And then we can see it reject and then potentially trend back upwards and try to get back to this 120 range. So we could be seeing this move happen, this downwards, maybe a little bit downwards pressure and then a rise up. If that's not, I also see a cup and handle pattern that could be forming. So we got the cup We're forming the cup. Oops. Currently forming the cup base of it. So we may see a little bit of downward pressure. And then that handle, and then once it breaks out the handle, we should be seeing the increase back to this 118, 119, 120 range, and then the 126 range. So that's what I'm seeing on Dell. Again, looks like Monday, if we open up green, we're probably going to be seeing it get to 118. And then if it gets to 118, can it break above? If it breaks above, then we're going to be seeing it get to 126. Now, if it opens up green and it rejects the 118 range, we're going to be seeing it get back to, and I can just move this up a little bit. We're going to be seeing it get back to our moving averages, which is going to be around 111. So if it was to trend upwards, test this level, reject, we're going to be seeing it get to 110. If it doesn't, then we're going to be seeing it get to 127. But from the looks of it on the daily, again, if it's opening up green, it looks like it's going to be bullish. So we could say that we're going to be seeing this get to about the 126 range. That's what I'm looking at. Any questions on Dell?
No, thanks, Mark. Just kind of upset at myself. I just had a lot of calls that I picked up around the 92 range and sold around 100. So kind of missed out on a lot of juice.
Yeah, but you made profit though, right? So you made some type of profit.
I did.
Yeah, so I always tell people any profit you take is better than no profit, right? So even though you took that small profit and is moving up, don't kick yourself in the head. You're on to the next trade. You have profits that you can set aside and go back in with your original investment if you wanted to. Because let's just say you stood in that trade and it actually went down. You'll be kicking yourself because you didn't get out the trade. So don't even dwell on it at all. You're fine. You made profit, so you won.
Yep. Thanks, Mark.
All right, so we're gonna have CVS. Take a look at CVS. Go to the weekly. All right, CVS. So we're gonna start off with some support lines. So we see we have support at about $55. We can call it $55. $55.50 would be support level. And it's currently, I would be a little bit careful just because it looks like this could be a potential bearish flag that's being formed, or it could be a double bottom, which is bearish, but it may be a bearish flag, which is bullish, excuse me. But this may be a bearish flag, so just be a little careful where we have the flagpole, those red candlesticks going down. And now we have this consolidation that's happening. So if it was to, so we're saying that this was to break out, hey, we can be seeing this get even lower. This is a potential drop of about $20 here. So we could be seeing a potential drop of $20. Is that going to happen? I can't predict the future. Again, that's going to take weeks, months, because this is on the weekly chart. So those plays move out slowly. So over time, we'll be able to tell. That's if it breaks below this resistance we have at 55.50. If it breaks below that, then just be on the lookout because this could be continuing to trend down. Now, this stock could be testing this bottom, and it could be making this bottom and about to trend upwards and start to go up in value. So the one thing that I would be looking for is, can we break above our resistance level we have here? That's at about $60. So can we break above $60? If we can break above $60, I will feel more comfortable getting into a trade on CVS, just because I could potentially predict that uptrend happening. And the reason why I say that is because the reason why I chose 60 is because we have multiple actions in this area, and then we also have that 20-week moving average. That 20-week moving average, again, is going to be treated as either resistance or support. So in this case, it's being treated as resistance because the stock price is below it. So we can break above that 20-week moving average and have a strong break above it, and we're going to be seeing the stock get back to about $67.84. So that's where I draw that line. And I'm drawing this line because that's the 50-week moving average. And then this also is a strong level of support. If we look back, we see we have strong levels of support here. So looking at this from the weekly, we're saying, okay, if it breaks below 56, be a little bit careful. Try to figure out where the bottom is before you get into that trade. And if it starts to trend upwards, if we can break above 60, then we could be seeing this get to about 67. So I will be making my alerts for, hey, if this stock price breaks above my resistance at 60, I'll be looking to get into my swing trades or my call plays. If it breaks below the 55, I'll be looking maybe trying to do a put or just waiting to see where the bottom is so that you can start to play it on the upswing. And that's on a weekly. Let's check the daily to see how it's going to be looking this week. All right. So this week, if we have a green week, this looks like we're going to be trying to see this get to about this $61 range. It's going to be looking to get to $61. And that's just because RSI level is pointing upwards. It's at 48. Stochastic RSI level is low. It's in the oversold region. However, we do have this MACD crossover that's about to happen. If we can get that MACD crossover to the upside, the way that this stochastic is set up for me, this is a perfect trade that I would be looking for to get in to confirm that I'm going to get that. It's going to get to 61. So if I see this setup, I can almost confirm that, okay, this is probably going to hit 61. These moving averages, if it can break above these moving averages, it's definitely going to hit 61. And that's all of that's going to play tied into it. So if it breaks above these moving averages, of course, the buying pressure is going to go up as well as the stochastic. So you're going to be seeing that uptrend. So we could see this uptrend happen, or at least a test at 61 this week. And it's looking like, so it's not looking like it's going to break underneath it. It looks like it's going to try to come and test this 61 level. So I'm making my watch list and I'm putting my alerts for, hey, if it breaks above 61, I'm looking to get into a trade. And then we can see here on the daily, 61 is relatively close to our 100-day moving average. So if it breaks above that, we almost can confirm that it's going to get to 68 as well. Now, will that 68 jump happen this week? Probably not, but the 61 is looking like more likely to happen this week. So we're looking to get that test on 61 this week. Did that help with CVS?
It does. Thank you. In addition to that, I've also heard that there was a dark pool activity on that. Somebody bought a lot of calls for mid-September for 65. And to that point, I think there's sort of like pointing upward. And to your point, I think we may see that E61 test this week or sometime soon. I think that's encouraging me to kind of keep an eye and kind of like get some calls to the upside.
Yeah, absolutely. Absolutely. Yep, so over. Oh, I have a question, Yvonne.
Yeah, Mark, can you tell us what dark pools are and how we check that out, or where do we go?
Yeah, so I've never heard of the dark pool before. I'm assuming that's probably like corporations making trades during the dark time. So overnight, they're probably making trades. I'm not sure if Ladaire's going to elaborate on it or if Ali could elaborate a little bit on that one.
Yeah, my understanding is that it's like these huge orders that cannot be filled by retail investors like you and I or traders. So dark pool is like they work their brokers and institutions and they put in a big bet and orders. So these are like big bets, and that specific bet that I'm talking about from CVS standpoint, I think it was like $2.5 or $3.5 million worth of calls that they bought for CVS with the 65 strike expiring September 15th or 16th, whatever that Friday was. So usually it's like behind the scene type of activity. And then they posted a particular software, which you have to have a subscription for. I don't, but somebody posted a screenshot of it in one of the platforms sharing that that's what they see.
Yeah, I've heard of dark pools before, but I just never knew what it was. And I do see like maybe some apps or something that do the dark pool information.
Mm-hmm. Yeah, it must be expensive if they're sharing like that kind of data. I never personally looked into it, but I know there's some sort of a subscription.
Over. So it looks like from the daily chart, they just recently had earnings about a few weeks ago. And let's check the weekly out. All right. So if we were to draw some resistance, you can say it's at about $3 is gonna, or 283 is gonna be our resistance, $3 to 283. We'll call it $3. So $3 would be where our resistance level is at. This was a huge spike. So support is going to be right here at about 210. It's going to be our support area. So what I'm looking at is, can this stock price break above this $3 range? If it comes and tests this resistance, we're probably going to see it try to pull back to 210. If it doesn't, then we're going to be seeing it try to reach the next, I wouldn't even say $1 range because this is penny stock. So it's going to move a little slow. So if it breaks above $3, we can draw our resistance, our next resistance at about 350, 342 would be our next resistance just because of the activity we've had in this section earlier. And if it breaks above that, then we're going to be seeing it try to get to $4. But from this standpoint, we're at a good spot to determine which way it's going to move just because we're testing, at the end of the week, it was testing resistance. It was testing this $3 resistance or getting relatively close to it. So if we can see it reject, then we're going to be seeing it get back down to about 220. The RSI level on this is really high, 84. I would be careful on trading this to the upside just because of how high that RSI level is. Yes, the RSI can stay above that, but just be a little bit careful. And that stochastic is also high. So I would just be a little bit wary and maybe wait for this one to cool down. You might have missed the chance on this one just because of where those RSI levels are at, and we know they need to come down. If we look at the weekly, at the daily, excuse me. If we look at the daily on the stochastic, we have a little bit more room to go up. If it is looking like the amount of space they have to hit that 100 range is probably going to push us to our support, our resistance line we have, at $3. So we may be seeing this get to $3. From here, it's probably going to start to try to cool down. So again, I would just play this one a little bit carefully, try not to jump in too early, and just wait. Maybe put this one on your watch list for sure, just to see what happens at $3. So if it hits $3, you can go back and reanalyze this stock because it looks like it's probably going to have to cool down. There's a lot of green days, and these spikes, it can't continue to go up forever, right? It has to have some type of cool down. Where that cool down will go, we could potentially see it come back to $2, or it could be trying to make some new support lines. We may see it try to come back and just test $2.63 just because we have those two candlesticks here. This could be making a bullish flag. So just be on the lookout for that. But I would be a little bit careful on playing this one just because you're not sure if it's going to go up or down from this point because it's been trending upwards for so long now.
Okay, thank you, Mark.
Mm-hmm. All right. Video. Let's get in video. All right, so we've been looking at a video quite often, which is perfect. All right, so looking at the weekly NVIDIA, 2 green weeks, it looks like the RSI level is a little bit high. It's sitting at about 65. I do like the way that the stochastic RSI level is setting up at it being on this oversold range. We could see NVIDIA get back to 132. The MACD is also about to have a crossover to the upside. This is the one thing that I would be careful on just because of where the stochastic is at. We could have a rejection in this on this MACD, and we could see a little bit of cool down on it if we look at the daily. But if it was to trend upwards again, we're going to be seeing it get to about 132. And if it was to fall back, it's going to try to come and fall back at this 119 range before it starts to break and try to fall back to 115. And if we look at the daily, we can see I like that the MACD, we had the crossover on the upside. The stochastic RSI is high, but because we had that MACD crossover, we could see this try to stay above this area a little bit longer. And by doing that, we'll probably see it get to around 132. And we see that it was testing, it broke above its 50-day moving average. So if we can stay above that 50-day, we're going to see it rise up. We may see a pullback. If we was to see that pullback happen, again, it's going to test 120, and then from there, it's going to come and test 115. So the way that I would have this on my watch list, what just happened to my screen? Hold on a second. Let me plug this up. Maybe that's what it was. So if I was to have this on my watch list, the way that I would be looking at it is, can I, if it's opening up green and you wanted to trade this to the upwards direction, if we have a green candlestick on Monday tomorrow, I'll be trying to trade off of that candlestick. And then instead of having, let's say I'm doing calls, instead of having my target price 132, I would be having it somewhere at about 130, 129. And what I would be looking for is, can it break above? We can draw a tighter resistance. Can it break above 127? So if it can break above this 127 range that we have here, then I can confirm that it's going to hit this 132, and then I'll try to make a quick little trade, target price 129. And if it's revving up and it's breaking above 129, I can hold it a little bit longer for 132 to see what happens at this 132 range. But that's how I would be trading it. Just because of where the stochastic is high, so I'm thinking that it's probably going to be green. And yeah, I'll be playing it like that. Any questions on NVIDIA, Ty?
No.
What time interval would that be, Mark?
For my trade, for where I'm trying to get in at, or just all in general?
Like if it was an option, how long would you go out?
Oh, yeah, so if it was an option, so I'll be trying to do this for this week. So I would put my time frame about 3 weeks. I always like to give myself some cushion just so for the time decay, but I would have it probably about 3 weeks. And then I'm not getting into that trade until it breaks above 127. So once it breaks above 127, that's when I'll get into the trade. So I'll be looking on you could be looking on the daily and saying, okay, it's breaking 127 here on the daily. You can go to your lower time frames, like your 30 minutes, to chart it out to see if it still has that upward momentum. And if it does, you can then go to your smaller time frame, like a 5 minute or a minute chart, to find your entry point. But that's how I'll be trading. All right. MU breaking above, testing our resistance. So this is another one that's looking bullish. RSI levels pointing upwards at 50. Low stochastic RSI, but it's starting to point upwards. So we could be starting to see this continue to trend upwards. MACD has that separation where the buying pressure is below the selling pressure, but we can see that it's starting to flatten out. It's starting to try the blue line buying pressure is starting to try to point back upwards, have a positive slope. So we could be seeing this get back to about 113 this week. We'll look at the, again, daily chart just to see if that can happen. But it looks like this is going to be trying to get to 113. If it breaks above that, we're going to be seeing it get to 119. If it was to reject it, the only place it's going to go is this 100 range potentially, and that's because that's where our 20-day moving at, or 50-week moving average will be. The blue line, it'll be closer to about $100. So we could be seeing a drop there if it was to cool down or pull back. If we look at the daily is same setup like NVIDIA. Stochastic RSI level is in that overbought region. But because it's like that and they have this MACD crossover, we could see it stay up there a little bit longer. And with that, we should be seeing this get to 114. So if it's opening up green, you can try to do your plays for 114. And if it's going to reject on this week, the first place is going to try to reject this 102. And that's just because we have these two moving averages at about 102. So 102 to $100 is going to be where it's going to try to find its bottom.
Do you see it going back to the 130, 140 range?
Like right up in this area.
Yeah.
Are you saying, do I think it'll get back to that level? I'm sorry. I was like,
Yes.
no, I'm sorry.
Yes.
Yeah, so it should potentially get back there. Just looking at the weekly, it should definitely get back to the 130. Again, it has on the weekly, the stochastic RSI level is going to move relatively slow because it's taking weeks of data. And then also that MACD, it has enough if it gets that momentum, it'll definitely get back to the 130 range. Yeah, it'll break above, because again, that's just breaking above this 20-week moving average. So it may not be this week or next week, but it should eventually get back to the 130 range. Yeah.
I think it has the earnings coming up, so I think that could be a potential depending on how it goes.
Yeah,
Okay.
correct. So earnings is going to
No,
be
earnings is in the fall. It had its
yeah,
earnings
it's not until
already,
September.
and that's why it dipped. It
Oh,
dipped
it just
after the
did?
earnings. Yeah, it dipped after the earnings. Right when you see the beginning of the dip, that's because of the earnings. It's about its
Mhm.
it met all
Oh.
expectations except its guidance. It started to dip down, and then we know that the yen carry trade, everything, kind of
Mhm.
tossed the market downwards, and now we're in a recovery.
Correct.
God, for some reason I was thinking it's next week, the earnings towards the end of next week.
No, you're thinking Nvidia. That's what you're thinking.
Oh, you switched to MU already? Oh, okay, sorry.
Yeah, Nvidia is August 28th, D-Day.
Okay. Yeah. Okay.
That's the D-Day.
Yep.
Yeah, so you still have time on MU. You know, the earnings isn't until September, so we could see this get back to 130 before their next earnings call.
Unless Nvidia doesn't do well. If Nvidia doesn't do well, then all of the semiconductors are
Mhm.
going to pull back. But
Correct.
I have a suspicion it's gonna do very well. That's my instinct.
Correct.
Yeah. My Dell is tied to that too. Like I follow that more in Nvidia, but they all kind of move in the same direction.
Yeah, I'm surprised you're in Dell. Interesting. Okay.
The daily for this one. Do you have any more questions on MU, Tuck?
No, except that I think just like Nvidia, it staged a really good recovery. I think it was
Yeah.
one of the best performers in the recovery. Okay. I think my next one was I had Meta and Microsoft.
Mhm. Meta is setting up really nice. It looks like it could be a potential bullish flag that's being formed, so we could see Meta continuing the trend upwards. Just trying to get rid of some of that stuff. Sorry. So we had this as a cup and handle at one point. We drew the little handle. We said if it breaks out, we're going to be seeing that continue to uptrend, and it's looking like it's creating another bullish indicator. Bullish flag. We have a flagpole, and then we have the oops. And then we have this actual flag that's forming to make it a flag, bullish flag. Looking at the chart, again, RSI level is a little high. We see that it can get back, it can get to 80. So we could have a little bit more room there. If it was to cool down though, it's probably just going to come back and try to test first this 20-week moving average, which is at about 489. And if it breaks below that, we could be seeing it come back and try to test about 460, 450, 460 as our next support levels. Stochastic RSI level is sitting in a nice spot for me though. Again, it's pointing upwards and it's almost hitting that neutral zone. So it's showing us that it does have room to get back to this overbought region, excuse me. And we're really close to a MACD crossover to the upside. And we just had a crossover on the 100-week moving average has just crossed above the 200-week, and we're now in numerical order where we have the 20-week, 50-week, 100-week, 200-week all stacking up numerically. So that's anytime you see that, that's a bullish indicator as well. So we could be seeing Meta continue to rise. Now, these are almost all-time highs, so I can't tell you how far it's going to go. But what I'll be watching for is on this 20-week moving average, where is the price rejecting it? If it's rejecting it, then you can feel comfortable getting into trades. So that's what I'll be looking for. And again, it looks like it's rejecting it. And with that MACD crossover that's pending, if we have that, we could be seeing Meta increase in value more. And that's going to probably take weeks for it to continue to go up. If we look at the daily, we see it's looking like we may need a cool down. So if it was to cool down, again, first place is going to go and test all those moving averages, and we have them in conjunction right here. So we could be seeing it try to get to about $490, $500 range before it tries to start to trend back upward. So we could be seeing a cool down happen, and that cool down is going to take us to about 490 this week. And if it breaks below that, we have nice support here at about 450. That can be where it's going to. It's currently at 527. And again, it looks like it may be trying to reject this area. So we may see a little cool down. So just be on the lookout for that. We're really close to these moving averages. Getting back into numerical order, we see that we have the 20-week moving average pointing upwards. And again, this is all in conjunction with one another. So if this was to continue to pull back while it's going down, the 20-week moving average, because it's a 20-day moving average, because the price is above it, the 20-day moving average will still be increasing at a nice pace to get above these other moving averages as well. And again, that's going to probably get us closer to our support. So I'll just be looking at the 20-day moving average to see where's that going to be. If it's, again, it's going to start out probably somewhere at about 499. So that may be our next support level that we have is 499, 500 is going to be that support. And I'm looking to see what happens from there. If it can reject it, we could be seeing it come back to 527. But if it was to break below it, then again, we're going to probably be seeing this get back down to 460. And with that, if it does trend downwards and break below, we're going to get closer to a crossover on that MACD as well to the downside. And that's going to be a bearish indicator. So we could be seeing this get to this 460 range. I think someone is trying to join. All right. Any questions on Meta? Ty?
So support at 450, that's a big drop.
Yeah. So it's not going to happen like in one day, but that can happen in a few weeks. As you can see, this is the daily chart, and it took 2 weeks for it to get from 450 to 527. Right? We have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So it took 2 weeks for it to get from 450 to 527. So it is possible. And the cool down, again, the first place is going to come and try is this $500 range. It's going to try to, if it is pulling back, it's going to try to come and test this $500 range, just because we have this cluster of moving averages and this is the support one. So again, I wouldn't get into a trade just off the rip. I would wait a little bit. Again, Monday when the market opens, just see which way it's trending. If it's going down, then just see each day what's the candlesticks doing, and then you can make a better formed decision on if you should get in the trade or not, or if you should be getting out the trade. But with that on a daily, with this stochastic RSI level this high, I would just be a little bit careful. I'm thinking it needs to cool down, and it can cool down to 460, but it's not going to get there before it tests this $500 range. So the first place I'm checking is if it's pulling back, can it reject this $500 range? If it doesn't reject it and it breaks below it, then we're probably going to be seeing this get back to 460. All right, then Microsoft. All right, so I'm gonna grab Microsoft, and then after Microsoft, I'm gonna let Ladarius go over picks, and then afterwards, I can catch the other ones if we still have time. But I see we're running a little bit short on time. So let me go to the weekly chart on Microsoft. All right, so we have Microsoft support. We drew support at 395. We see tested 395. It broke below our 20-week moving average, tested this 50-week moving average, which is also close to the support we have, and is rejecting it. So now what I'm looking for is, can we break above our 20-week again? If we can break above 424, then we're going to be seeing this try to get back to you. So we can break above Support here at about 424 or 420. We could be seeing this get back to the top of our all-time highs. So at the resistance at about 460 is where we could be potentially seeing this. Again, this is on the weekly, so it may take a few weeks, may take a month for this to happen. You can see from 460 down to 394, it took about 5 weeks for that to happen. So we could be seeing another next 5 weeks, we could be seeing this back at 460. Looking at where we have an RSI level pointing upwards at 53, and we have our stochastic RSI in that oversold region pointing upwards. We could be seeing this starting to trend back upwards. The only thing I'm waiting to see is, can we break above our 20-week moving average? If we can break above the 20-week moving average, then we should be seeing this get back to 460 in the near future. If it was to reject this area, it's going to simply come and try to test this moving average we have. Again, it's going to be at about 395, maybe 380. It's going to be 395, maybe 400 would be that range that it's going to be testing. But just be on the lookout for that. So if it rejects, that's where we're going to be seeing it. And if it breaks below that, the next place it can potentially get to is going to be sitting here at about 378, 380. It's going to be the next place that I would have my support. And if we look at the weekly, we look at the daily, we can see stochastic RSI level is a little bit high. So I'll just be on the lookout for that. If it was to break above it, because again, stochastic, while it's high, we had that MACD crossover that can cause us to go up. So if it was to continue to go up, it's not going to go straight to 460. What it's going to do is it's going to come and test 435 first. That's the next level on the daily chart where it's going to come and test, because this is our 50-day moving average, and we can also see in the previously we can see it treated this range as our resistance. We have testing here, relatively close here. Even when it broke above it, it still came back to try to test it. And when it was on this downtrend or this cool down period, we can see when it tested this area, it checked in and it rejected before breaking below it. So that's the next place that we can potentially see it get to if it was to trend upwards. If it was to go down, we can see it try to test 408. Again, 200-day moving average. All the moving averages treat them as either support or resistance. So if it was to reject the 20-day moving average, we're going to be seeing it try to get to 408. So what I'm looking for this week is, okay, if it's trending downwards, what happens at 408? Can we see a rejection at 408? If we see that rejection, we'll then be seeing it get back to 422. And then if it's green, I'm looking at, if it's green and it breaks above 422, we're going to be seeing it get to 435. And then that's the next place I'm looking to see what happens. So if it's green, you can do calls to 430, 434. If it's red, I wouldn't necessarily say do puts, but you could do puts to 408, or you can wait until it tests this area. And if it rejects, you can then do your calls to 420. Does that help with Microsoft?
Yes. Can you look at the monthly? I just want to see it as a long swing.
Say it one more time.
Can you check it on the monthly so I can see it as a long swing?
Yeah. All right. So on the monthly, could potentially probably just wait a little bit. I would be a little wary because the stochastic RSI is pretty low here. It's trending downwards, and we're really close to that MACD crossover. So if you're looking to trade it for months, I would be a little bit careful with it, just because we're not quite sure what can happen here. I would be a little bit careful with that one. And if it was to trend down again, it's going to come and test this 397 range first. But we're really on that monthly, we're really close to that MACD crossover to the downside. Any questions on it, Todd?
No. I'm just curious because BMO put a price target on it of 500. That just came out Friday. So I'm like, where do you see the 500?
the 500. Well,
Yeah.
again, that's going to be like, 12-year, let's say 12-year, 12-month time frame. So they're saying the next year they can see it at 500, which is that's correct. They can potentially see it at 500. You just gotta wait to find the right spot to get in. Again, if you look in the long-term invest, I would say don't necessarily worry too much about the technicals, because in a month or in 2 months, we can see a earnings report from Microsoft that causes it to increase as well. That can kind of negate this monthly time frame that we're looking at. So I would just be a little bit careful now. If you're looking at balance sheets and things of that nature, investor in IR, that can make you a more informed decision on your longer trades than just the technicals that we have here.
Okay. Thanks.
Mhm.
Thank you.
All right. So again, for the last two that I see Ross said, if we have more time, I'll go over them, or the Ladarius can go over them after he go over his picks for the week. I appreciate y'all.
All right, cool. I appreciate that, Mark. Let me go ahead and get my screen going. Yeah, I can cover, what is it, XO, XL and TQQQ. Yeah, I can cover those at the end. What I'll do is go over 3 quick ones, and then I'll add those 2 to the end before we get out of here. All right. Share my screen. Where are we at? Boom. All right. So DKS, this was one that we talked about in the Discord. This is Dick's Sporting Goods. They've been doing great. They've been in a period of consolidation for a while, but as far as earnings, again, they've been doing great. They had a few misses, I want to say. If I scrunch up the chart and you see how many E's are red versus how many are green, way more green than it is red. If you're looking at the E's at the bottom, which means that they've been smashing earnings. So now, let me reset this chart. So now we're right up against, and let me zoom in. Right now we're right up against this top level of resistance. We tested it, what is this, Friday, at about 230. We hit 230 for a second, and then came back down to about 225, which is cool. But I think that if we can stay in this 223 to 228 range going into earnings, they have earnings on the 4th of September, then we could see a pop to the upside, finally breaking out of this long period of consolidation. So this is more of like a slanted bull flag, strong move up. They haven't run into any consolidation on this run from down at 101 all the way up into 200. Yeah, for $100, they didn't hit any consolidation. Now it's just floating around in the same price point, but I want to say in the Discord we called it when it was around 205, I want to say, and we were aiming for 230. Yeah, it's at 224, but it did hit 230 on Friday and pull back. So keep this one on your radar. This is one that we watched and it did well. I know Mark covered NVIDIA. We also talked about NVIDIA going back up at least to 120, and it shot above 120, which is nice as well. And yeah, Dick's Sporting Goods chopping up, but is at the top of this range here as far as resistance, and then it's going into earnings, which again they normally perform well on earnings. So it's going to be interesting to see what happens going into earnings. So they have earnings in about a week or so. So yeah, I have this one on my watch list as well. All right, next one, Tesla. So Tesla has been a wild bucking bronco of a ride. Tesla's always up, down, sideways. That's what happens when you have Elon Musk as the CEO. Great company, but Elon Musk sometimes just he likes to put his foot in his own mouth. I think sometimes he just stay quiet on certain things. I mean, on some things as the CEO, you kind of have to, upsell your product. But on a few other topics, you could just wait and not say anything too soon before it's out, to where people actually start to tack it against the company. But the company is great. Right now is in a good position on the daily. So it has a 51 RSI pointing up. Also, it has bounced out of consolidation. It was consolidating around 195. And now it's getting right back above its 20 and 50 day moving average. So right now it's at 216. The next level that I'm watching for it is 222. After 222, we can be looking at 232. And I think that we could get back up to about 245, 250, which is about right there before we run into some chop if we continue this move to the upside. Also, the MACD, I mean, is extremely close to crossing over to the buy side. We've been in a sell trend for a while since July 18th is when it was confirmed. And now it looks like we could be switching over to the buy side. Again, if we switch over to the buy side, our side has enough space. It is warm. It is at 51. Good ticket higher. And then if we look at the stochastics, it is at 72 out of 100, which means we lock in this MACD crossover. We have enough space on the stochastics to take it up. And we have enough space on the RSI to take it up. So again, we could be seeing 222 to 244 to the upside. On the downside, I will be watching 206 to 200. If it breaks 206 to 200, then it's dropping back down to 190. What is that? 197. And if it breaks 197, we can go all the way back down to 180 potentially. So right now, upwards momentum. The market is, moving up. But I think that, again, if we can break 222 and actually stay above it, not just break above it in the middle of the day and come back down. If we can break above 222 and stay, then again, 232 up to 245. Ali, you have a question?
Yeah, not necessarily a question, but a comment. I don't know if you knew that he held a podcast with Trump last week. And yeah, to your point, like he's now becoming more and more, I think, vocal and political versus before he kind of like kept, in some cases, quiet. But I think it's going to be more of his personality now where he's going to be vocal on some of these issues. So I think, I don't know, we will see eventually like if it's going to help him or his company and his stock versus, if it's going to hurt him. But I think we will have to be cautious of the volatility there too, that I think he was talking about in his last podcast that he's going to do more with Trump in future.
Right. Yep. No, I agree. Yeah, I did see that he had a podcast with Trump. I think that it also depends on what Trump says as well. If Trump comes out and says that they're going to increase, I don't know, incentives for EVs, or they're going to, it's a way to say things to help Tesla without Tesla, right? So if we start to see that, then of course Elon Musk is going to, add fuel to the fire and talk about it even more, which could help the stock. I know in a twisted way, sometimes we have bad events that send stocks up that we think, socially is bad, but then the shareholders and investors keep, they buy up the stock because of whatever. Like for instance, you can have a CEO leave a company. That's detrimental, but then the stock goes up because the CEO was trash and the investors wanted someone else anyway. So yeah, it's going to be interesting to see the delicate dance that's being performed by those two when it comes to the election. And then it's like, what happens? Because right now, to me, it's a toss-up. I don't know who's going to win, but what happens if Trump loses? And what happens to Tesla stock at that point? Is what I'm also looking at. So yeah, it's a lot to watch, of course, for Elon Musk. But again, just looking at the technicals, looking at the chart, as long as he doesn't, I don't know, say anything crazy. Cool. I appreciate that, Ali. All right. Yeah, so Tesla looking nice. Again, MACD crossover to the upside, 244 high, 200 low. If it breaks 200, I'll be watching about 197 to the downside. You can also watch 192 if you want to. And then again, I'm watching 180 for POC on the VRVP. All righty. Capital One. It's another one that I've been paying attention to. Capital One, really nice setup. Similar to Tesla, but different sectors. So Capital One has a 51 on the RSI pointing up. It was also coming out of consolidation from around August 5th, where it was sitting around 130 for a second. Now it is at almost, pretty much 140. So it hopped up $10. And if it can keep moving, the next level that I'll be looking at is this level here, around 144, 145. And then I'm looking at 150. So The MACD crossover to the upside. How close is that? It's getting closer. It looks nice. Also, the stochastics is only at 41 out of 100. So this could take some time, but once it gets some movement, we're looking at 50, 80, 100 to the upside. So Capital One is another one that I have on my list for all type of trades and investments. So this could be a short-term trade, but I'm also looking at Capital One for a long-term trade when we get, interest rate cuts and we go into that season. This is one I'll be paying attention to see if it gets some increased volatility based on rates. Ty, you had a question?
Yes. Why Capital One and not Visa or MasterCard?
Capital One, because I like the I guess it's a personal preference, but Capital One because I think MasterCard just announced a major layoff. Either MasterCard or Visa. I can't put my thumb on it, but one of them announced they're dropping 5,000 to 10,000 employees. Capital One, they're trying to buy Discover. I think if they can actually close on their buy from Discover, then the stock will skyrocket. So that's why I'm keeping it. It's just more, they have a more attractive news cycle. And I think that the stock has been in a period of consolidation and just building up momentum for before it breaks to the upside and makes another run. Not saying that the other ones won't. I just like the story and the news behind this one better.
And you were looking at purely from the technical standpoint and not fundamental, whereas the other companies, the fundamentals might be equivalent or stronger. But just to be clear, like you're looking at and suggesting CUFs purely from the technical standpoint.
Yep, strictly from looking at the chart. No fundamentals, no company valuations, PEG ratios, nothing. Yep. Does that help, Ty? In my reasoning?
Yeah. It's just I only mentioned Visa and MasterCard because they're just so much bigger, right?
Yep. True. Yeah.
So it's sort of like why buy a smaller communication company when you can buy Meta or Google? Do you know what I mean? That's my only thinking.
Yeah, it depends on what you're looking for. Like if you're looking for safety, of course, you're going to get the safest name in the space. But if you're looking for growth, sometimes the smaller companies will grow at a faster pace than the larger companies, because the larger companies are, again, it's hard to double a company that's 200, 300 billion, right? But yeah, so again, I'm looking at this one just from a technical standpoint. Now, if I'm looking at a long-term investment, then yeah, I'm running the numbers different, and I may not lean so heavy on what I'm seeing from the charts.
Okay, thanks.
No problem. Ali, did you have a question?
Yeah, I was just gonna say, would you mind just going back to DKS real quick? Don't you see it at the resistance already?
Yeah, it's testing so we were trading from 205, 206 to about 230. And this, it was pretty much an update on this one. We can also see that the stochastics is maxed out, right? At 97. So, it could bump up a little bit more or coast along the top, but eventually it's coming back down for a cool off. This one I would be looking at, if you're looking at a pullback or consolidation, this is what I would be looking at, but I don't think that pullback or consolidation would be that much. Like if it pulls back, it's at what, 224? If it pulls back, the worst I have, it needs to break 223 first, but then after 223, we could see 217 to 215, about a $9 pullback, not too much. But yeah, it is at the top. Again, I'm thinking that if we can stay within, if we go into earnings between 222 to 230, like in this, let me zoom in this range here, this top resistance and support band, then I think that we could break higher and potentially go to 240, 250. I think it's time for them to go higher. They've been consolidating for a while.
Yeah.
Well, we're earning. So it looks like the next pop could come from earnings.
Yeah, especially I think in the previous trading sessions, it has hit and tested that 224, 225 range a few times.
Sorry, I stepped away. I had to run and grab my computer charger. It was about to die.
I was just gonna say, like in previous sessions, few sessions, like we have seen, like it has tested 25-ish range like few times. So this time it may as well break it.
Yeah, yep. It's at the right position again for a break to the upside. So I think
Mhm.
the stock is still tradable, especially if you can get it on a pullback going into earnings. Because even if it pulls back during earnings, I still don't think it's going to fall out of this consolidation zone. And I honestly, I think they're going to beat earnings and go up. I'm
Okay.
not saying that they're going to explode, but I'm looking at 240, 250 to the upside from earnings.
Got it. I'll put it on the watch list. Thanks.
All righty, no problem. Also, another thing about DKS, look at it on the weekly. So you can clearly see the bull flag that is being formed. It is also above that 20. It's testing the top of that flag and it wants to break out. And then if you look at what we need for an explosion to the upside, if we get a big enough gap, then we can go ahead and close this on the MACD. And then we also are just right at 20 for the stochastics on the weekly. So this, again, earnings could send it up to, I don't know, 50, 60 on the stochastics if it pops. But then beyond that, we still can go all the way up to 100, which we could be getting, I mean, 260, 270 is possible if it runs off of earnings. But right now it's flagging really hard, testing the top, and it even has a little space on the RSI on the weekly.
Yeah. So if you were to recommend calls, like is there a particular strike or particular time frame you would choose?
We called, well, the one that we called in the Discord, I think that one is pretty much run its course. But I would need to look at, what I like to do is look at the option chain when it opens tomorrow to see how it's being priced, bid, ask, implied volatility, so on and so forth, before I pick my date. But I would like to pick a date to where the earnings wouldn't mess with it too much if it dropped. So I would look for, let me see, earnings is on the 4th. So I'll at least give end of September. I would try to go beyond earnings and then try to get it as close as possible to the money just to protect myself. You know, if it drops from earnings, but then if it pops from earnings and you're really close to the money and you have some time still on it, then you can play the run, you know, like, you know, pop from earnings and then keep running for the next, I don't know, 5 days. And you can get all of that too, if you stretch out the date the right way.
Yeah. Yeah. Do you have a group and you like people to join the Discord group?
Yeah. I can, if you wait a little bit at the end, once everyone leaves, I can give you a demo and then we can have a conversation about how the Discord works and all the other things that we offer inside of it.
Okay.
Cool. How, you had a question?
Yeah, you said option chain. Where do I go to look at the option chain? Because I've been wanting to look at the option chain for, guess what, NVIDIA.
Oh, yeah, it just opened. So the option chain that I'm talking about is once you open your brokerage, you can go to the options. I don't know if they need you to put the stock in first or afterwards, but once you put the stock in and you pick the day, then it should give you a chain of prices based on strike prices. So if you pick the, let's say if you pick, I don't know, September 30th or the end of the, whatever the last Friday in September is, you pick that date, and then it should give you the price points for all the strikes. And so while you're looking at the price points for all the strikes, you also are going to be able to read the implied volatility, the volume, open interest, Greeks, so on and so forth. That way you can judge between what strike you want. And then if the date, you know, it really doesn't work, if you don't see anything that you like, you know, per those strikes, you can move the date back or move it forward, depending on how much you want to spend on the trade.
Is there a website that sort of like, do you know what I mean, culminates the option data?
I think so. Yeah. What I'll do is I'll get that link for you and post it in the option chat in the Discord. But you're basically meaning like a display of what's what in a simple
Yes.
like how to of what it is and how it works.
I just want to like I want to see sort of what all the major calls and puts and everything. Do you know what I mean? Like sometimes
Yeah.
I'll read on Apple News and they'll have an article about like where the most option plays are, and I'm like, where are they pulling that data?
Oh yeah, sometimes and you also want to see what they're judging it by. If they're saying like this is the biggest option call by open interest or by volume, only thing you have to do is go look at the contract and then compare the volume. Like if you look at the volume in the contract and it's 3 times as much as the other contracts that are around the same price point or date, then that's probably what they're talking about. That's probably where they get that information from.
Okay.
Cool. All righty. What time? We're at 7:52. I can cover the last two. Where were they? SOXL and TQQ. Let me cover those. Also, I think I mentioned this before. We're working on Mark and I. We're working on the notifications. So from now on, starting like next Sunday, what we're planning to do is set notifications per our support and resistance. And the notifications, we can have it if you subscribe to our email list. We can have it sent to you via email. I don't know who would want that. There's an option for it. I don't want any plays sent to me via email. And then we can also send them to the Discord via the webhook, and we can have it, you know, pretty much tell the play. We can have it tell the if, ands, buts, so's, all, you know, all of that in between. Once the alert set, so the alerts that we chart out here for the different stocks, we can set them on the lines, send it to the Discord. That way, throughout the week, as these different stocks break the levels that we need them to break or drop to the levels that we need them to drop to, it'll send the message in the Discord. We can all respond, react, make money for you all. So that's for the Discord, my Discord people who are in attendance or who is going to watch this recording on YouTube. All right. Let's switch it over. We said what? SOXL, semiconductor leverage. Cool. Yep. All right. So this one looks like it's going to pull back on the daily. We can check the other time frames. And it's right at POC. POC is the point of control when you're looking at the VRVP. So it's hitting this ceiling of volume right here. Let's see what it is. What is this? We got 62 up and 72 down. So 72 down. What it would need to do is to break out of, what is it, at 39? It really needs to break out of the 43 to 44 range so it can get on this next node. The next node is 55.9 to 56. It has a better chance to go up there because the volume, when it compares to the buys and the sells, are pretty much even. And then if you go higher, even at 48, you're still going to have a struggle. 49 versus 41, 41 versus 43. So I think, again, getting this above 43, it could move to the upside, but then you're going to run into that 46 to 48, 49-ish area where you could get stuck. Again, stochastics is maxed out. We did get across to the upside. So we may, I'm not saying that it's going to pull back now, but we may run into some consolidation to where it just trades sideways for a second. And it could pull down to like 37.40. Worst case right now is 31 top side right here, right there. And we can see we had a couple of tests before a break to the upside. We also had a bounce back here, and we had a few bounces back here. And we also had a test right here. So this is going to be an extremely strong line for support. So if it drops all the way down here to 32, that's an easy buy for a bounce back up to the upside. But right now it looks like it's going to consolidate under POC. And it could be building its way back up to the upside. It just needs to retake those other price points after consolidation. Again, stochastics is telling me that it's holding and it's maxed out. But yeah, and then it's also leverage. Yeah, like they're saying in the chat, it is, if NVIDIA pulls back, then this is going to pull back as well. Again, what I'm looking at is 31, the hard support. It could come all the way down to 26, but it just depends on what happens with NVIDIA's earnings. So always good to see. I appreciate that, Ali. You just subscribed to the channel. I really appreciate that. All right, 4 hour. What are we looking at? Same thing, consolidation. This is a better picture of it. Consolidation, look at the stochastics. It's just kind of cruising at the top. It needs to cool down a little bit. Again, it could be pulling back down to this area. Excuse me. No, talking too much. All right. Could be pulling back down to that area before moving higher. But again, NVIDIA is going to dictate where this goes next. And on the 1 week, yep. Again, same level I was saying. Still could pull up to 45. We see that it pulled up to 45 to, We got 56 on the wick, but yeah, this could be making the head and shoulders. And the head and shoulders is a bearish pattern, which means that shoulder 1 is formed, is going to form a head, and it can form shoulder 2 that's right at the same level before it eventually flushes and pulls back down. So interesting to see and know that this is being driven by NVIDIA. So since NVIDIA has been popping back up, it's taking this back up, but then you also have to watch for all the other semiconductors and semiconductor related news. But yep, good one to watch. Next one is TQQQ, 3 Qs, TQs. Oh, same. It looks same exact thing. I just switched. That's crazy. Let me see. Is it the same on the 1 day? Yeah, pretty much the same thing. Yep. I mean, different price points because this is a what $60, $60 to $70 stock. Same thing though. It needs, so it has a level here at about 71, 72. You can also see it on the VRVP to where we have a chunk of volume in this area that we can run into, which is right there. And it's already sitting at a level that we could call resistance here. If it pulls back, it could be pulling back to 63. POC is lined up with worst case scenario at about 58, 59 is what I'm seeing. And again, we don't want this to get too high and then come back down because it will form an inverted head and shoulders, which I think we may be out of that on the daily, but we have to see what happens with NVIDIA's earnings. So last one, PLTR, and then we are out of here. We got it's 8 o'clock now, but we can get this last one in. The rest of the plays and stocks I'll be posting in the Discord this week. Also, good news is that I only work 3 days this week: Monday, Tuesday, Wednesday. So Friday, Monday, Tuesday, Wednesday, and then Thursday and Friday I am off. So I'll be, if you need some one-on-ones, my calendar is open. I'll be in the Discord more. I'll be working on a few other things. And then the following Monday, I'm out of work as well. So I get to spend a lot of time with you all in the Discord. So if you need anything, just let me know. But let's look at PLTR. Oh, this was already reset. All right, this one looks like it's at the top of its channel. It finally broke that $30 price point and ran to the upside, but it looks like it's maxed out on the RSI. It's also maxed out on the stochastics. Is at right at 100. And then the MACD is already crossed over to the upside with strong green candles. Eventually, we should be getting some powder green to show some softness. And let's look at, I know the 4 hour is probably maxed out. Yep, 4 hours maxed out for sure. Look at the 1 week. 1 week, we still have a little space on the 1 week. We could get up. Dang, we set this line a while back. We could get up to about 35. That's this blue line at the top of my screen. We may need some, some days of consolidation and pullback to get there because, again, on the daily, it's starting to get maxed out. But the stock is already at 32. We could squeeze up 40 more bucks to about 35 before pulling back, especially looking at this on the weekly. The stochastics is at 68, which means that we have more to go if we wanted to test 100. Also, the MACD decided that it didn't want to cross over in this area and popped back out to the upside, showing that we have strength. Again, that could take us up to 35. If, it's going to be a slow ride up to 35, but I still think after that, we may be coming back down to 30, 28 to 30. And I think that if we come back down to 28 to 30, I think that's another good buy-in for PLTR. Cool. And we are at 8:02, so a little bit over time. Let me stop sharing my screen, stop the recording. And again, this is automatically going to be uploaded to